Hi everyone, I'm Joel, a research analyst at IFAS, and today I'm joined by Yeu Huan, Joint Head of Asian Equity at Nikko Asset Management. In this episode, we'll be discussing the Amova MSCI All Country Asia ex-Japan ex-China Index ETF, which invests in large and mid-cap companies across developed and emerging markets in Asia, excluding Japan and China. Yeu Huan, could you tell us more about the new ETF that is being launched by Nikko Asset Management?
Sure. The Amova MSCI All Country Asia ex-Japan ex-China Index ETF, or Amova AEJCS ETF for short, marks an important milestone in the expansion of Nikko AM's portfolio of exchange-traded funds. It demonstrates our commitment to bring high-quality and low-cost products to investors and was created in partnership with MSCI, a premier index provider well recognized on the world stage. The Amova AEJCS ETF will be listed on the Singapore Exchange, and its investment objective is to track as closely as possible the performance of the MSCI All Country Asia ex-Japan ex-China Index before expenses. It provides investors with a differentiated access to large and mid-cap equities in the Asian markets, excluding Japan and China. This may be different from other ETFs which invest in Asian markets but include either Japan or China or both.
I see. What kind of investors is this ETF suitable for?
It is suitable for both retail and institutional investors who are keen on an investment allocation to the Asian region outside of Japan and China.
Could you share the rationale behind excluding both Japan and China in the Amova AEJCS ETF?
The first reason to exclude Japan and China are the size of the two heavyweight markets. In conventional ETFs, including Japan and/or China, the two markets dominate in terms of country allocation, overwhelming the other high-growth Asian economies and diminishing their significance. Our AEJCS ETF allows investors to focus on the other high-growth markets in Asia, like India, Taiwan, Korea, and the ASEAN countries. Secondly, our ETF also allows investors to have control over their allocation to the Japan and China markets, instead of being dictated by the allocation in a broader ETF. An investor may be positive on the whole Asian region, but not so positive on Japan and/or China as to have as large an allocation as what he would have in a regular Asia or Asia ex-Japan ETF. Such an investor can invest in the AEJCS ETF and separately have smaller exposures to Japan and China via individual country funds or ETFs. In this way, the investor can calibrate his exposure to Japan and China on one hand and the other high-growth markets in Asia on the other hand via the AEJCS ETF.
I see. That makes a lot of sense. What key countries or regions will the AEJCS ETF allocate to, and why should investors be keen on these markets?
The largest country allocations in the AEJCS ETF are Taiwan and India, followed by Korea and the ASEAN countries. We believe that the AEJCS ETF captures a diverse range of structural growth drivers. These include India, which we think is the largest driver of economic growth in Asia. India's GDP growth is expected at 6.9% in 2025, according to OECD forecasts. Potentially, it will become the world's third largest economy and transition to an upper middle income country by the 2030s. There's also Taiwan and Korea. Both countries enjoy tailwinds from the tech and AI megatrends, benefiting from hardware supply chain capabilities and software expertise. Lastly, there's ASEAN, which offers diverse growth opportunities with its vibrant and young population. Key themes driving growth in ASEAN include rising consumer demand, diversification of global supply chains, and healthy industrial growth.
What about industries, and which companies will the AEJCS ETF's largest holdings be?
The ETF will be most exposed to the tech, financials, and consumer sectors. The largest holdings in the ETF is expected to be tech and IT services companies like TSMC, Samsung Electronics, Infosys, Hon Hai, MediaTek, and Hynix, as well as financial firms like HDFC Bank, AIA, and ICICI Bank.
TSMC or Taiwan Semiconductor makes up about 18.2% of this ETF. What is your outlook for this company?
We think that TSMC is the undisputed global leader in the foundry market with unmatched technology, expertise and scale, as well as financial performance. Its prospects are strong, supported by structural growth in chip demand and the relentless drive up the technology curve due to the mass adoption of artificial intelligence, or AI.
How has the MSCI Asia ex-Japan ex-China Index performed compared to the broader Asia and Asia ex-Japan peers in terms of both returns and risks?
Over the last 10 years, the MSCI Asia ex-Japan ex-China Index has delivered an average 5-year rolling annualized return of 6.8% in Singapore dollar terms. Over the same period, the average volatility of the index was 13.8%, providing a Sharpe ratio or return to risk ratio of 0.49. The Sharpe ratio is an important yardstick which measures how much return an investor would have made for taking a given amount of risk. In comparison, the MSCI Asia and Asia ex-Japan indices have achieved lower Sharpe ratios of 0.46 and 0.39 respectively.
What methodology will the Amova AEJCS ETF employ to track the performance of its benchmark index?
We will use an optimization and/or representative sampling methodology. This methodology allows the ETF's manager to track the performance of the benchmark closely, but without holding every security in the index. It involves selecting an optimized subset of the constituent stocks of the index which can mimic its performance. Selection is based on factors such as size, liquidity, as well as market and sector distribution.
What is your tracking error target and optimization parameters?
We aim to have a tracking error of not more than 100 basis points for the ETF. We will invest in about 150 of the roughly 400 to 500 stocks which make up the ETF's benchmark. The optimized portfolio will be rebalanced quarterly in line with the rebalancing frequency of our benchmark. Overall, this methodology allows the ETF to be managed with lower costs and greater operational efficiency.
I see. Is the Amova AEJCS ETF the first of its kind?
It is the first Asia ex-Japan ex-China ETF to be listed on the SGX, as well as in the Asia-Pacific region. While there are already several emerging market ex-China ETFs out there, an Asian-focused one is a relatively new perspective, which we believe will appeal to investors in Singapore and in the Asian region.
Do you have any final words for investors with regards to the Amova MSCI All Country Asia ex-Japan ex-China Index ETF?
The Amova AEJCS ETF will be listed in Singapore dollars for the convenience of Singapore-based investors, and it will be listed on the 2nd of April on the Singapore Exchange.
Thank you, Yuan, for your insightful sharing. For our viewers who would like to learn more about the Amova AEJCS ETF, you can visit the Nikko AM website.